Hey guys, welcome back to another episode. This is my weekly series where I take a quick look at stocks in my buying list for this week. Like most of you, I put money to work on a weekly basis. So every single week, I'm either looking for new investments or some old positions that I want to increase my overall exposure to. So today's episode, I have some 4 interesting companies. The first one we're going to take a quick look at is CRNC. This is traded under the Nasdaq as ticker CRNC. But if this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have a link where you can get 10 free stock ideas right now, and that's free, so make sure to check that out. So like I mentioned, CRNC, this is my one of my tier 1 companies, right? This makes up one of my top 5 positions depending on how it is. Right now the stock price has kind of pulled down. I don't believe it's my top 5 at the moment, but I want to increase my overexposure right now. So for CRNC, this is kind of dealing with artificial intelligence voice command. I'm very bullish in the smart car world, right? Smart cars are becoming a thing. And I feel like this is a huge market where many investors can kind of grow and kind of get some strong returns. And CRNC is a big player in the voice recognitions. If we take a quick look at some recent news, Vietnamese EV innovator VinFast selects CRNC to power intelligence voice assistants across its global lineup. We also have some other, we also have another one, I believe, Audi. Yes, CRNC powers conversational AI in Audi's e-tron GT and Audi's Q4 e-tron. So we can definitely see some players using CRNC, a good position. A good amount of tier 1 companies already use CRNC, but we're starting to see this evolution in smart cars right now, and CRNC continues to be chosen by some of the big players. Unfortunately, recently we had on September 27th of 2021, CRNC kind of saw a decrease in price targets. Their price target went down to $112 from $114. Right now, the current price is about $91.28. I do want to say, right, CRNC depends a lot on forms of licensing deals with I want to say tier 1 companies. So right now with the overall chip shortage, it has definitely affected this company, right? If less vehicles are being produced, if less vehicles are being shipped, it does kind of decrease the overall licensing revenue to some extent on a short-term basis. But eventually, right, so that's definitely causing a bit of a impact on the company's stock price. We can see from its 52-week high closing, the stock is down about 31.59%. And when later on, we're going to take a quick look at metrics. But we can see there's another one that kind of adjusted the price target from 130 to 113 from 115. So recently there have been 2 analysts that kind of decreased their price targets. That kind of brings a little bit of a bearish sign to the company. We're going to see in technicals right now at $91.28. This one looks super attractive in my opinion. The second one I want to take a quick look at is Facebook. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. So Facebook is already in my portfolio. It's not a tier 1 this year. It was actually a tier 1 in 2020, and I did great returns on it. For 2021, it did not come up as a tier 1 company for me, but it's one I really want to increase my overall exposure for. Right now, it's traded under the Nasdaq as ticker FB. We can see from its 52-week high closing, the stock is down about 10.25%. Not the biggest closure, and we can see from its most recent earnings, they reported amazing numbers, right? We can see their advertisement revenue was up 56% compared to the same time last year. Their other advertisement, even though it's super small, most of their money comes from the advertisement business. Their other revenue was also up 36% year over year. Their other revenue kind of impacts some of the other hardware they're doing. One of the biggest player or the most known is their Oculus Rift or the virtual reality. And this is one of the excitements that I have about Facebook, right? So Facebook, I believe the advertisement world is going to continue. They're still going to see strong strength there. Recently, there have been some changes with the way some companies handle data, which Facebook says has affected their overall advertisement to some extent. I do believe this is probably going to be some short term, maybe for a few quarters. to me, Facebook advertisement is still going to be one of the leaders next to Google when it comes to advertisement. But for me, the real interest about Facebook is their focus in developing technologies, and that's virtual reality and augmented reality. They're really focusing here. We can see they introduced Horizons Workrooms. So Workrooms is more like a virtual office that one can do. At the moment, I still believe we're still in early stages, but I like that Facebook is kind of moving into that direction. So recently, we have definitely seen Facebook on the news. There's been a few hearings that Facebook has appeared in just the past month, and I believe that's causing some form of negativity to the stock price. Another thing that we're seeing is recently their CFO stepped down, and we're already going to have a new CFO. The new CFO is inside the company already. He is actually the one who runs. Let's see, I have it here. He runs the Facebook Reality Labs, and that's the one that's going to move as the new CFO. The Facebook Reality Labs, this is the one that focuses in the AI, in the VR, in the AR, and in a lot of the engineering aspects of Facebook. So for me, him becoming the new Chief of Technology Officer was a great move. So interesting, right? But still, no one likes to see a change in leadership, and I do believe that's also causing a bit of negativity in stock price. Most recently, right, Facebook does say that the Apple privacy changes have hurt digital ad measurements. This is another thing I believe is causing some form of negative trend to the Facebook stock price. So Facebook already in my position. One I don't mind adding at these levels. The third company I want to take a quick look at, and it's on my list, is Google. Very similar to Facebook, right? The advertisement world. I don't think it's going anywhere. I think it's going to continue to grow and continue to grow on a yearly basis. We can see right now from its 52-week high closing, the stock isn't down much. It's down about 6%. This is one that, same as Facebook on 2020, it was a tier 1 company for me. 2021, it didn't become a tier 1 company for me, but I'm super excited because 2020 was when I built up my position on Google. So right now it's more of like a dollar cost positioning for me for Google. It's not a time to go in super heavy. But if we take a look at Google's most recent earnings, right, revenue grew 62% compared to the same time last year. So this, again, YouTube, everything, the way Google is advertising and the way YouTube is growing, this is one that I don't mind holding on for the long terms. Some recent news about Google is we can see some price targets increase to $3,900, up from about $3,034. That's a huge growth. Right now, Google is standing at $2,700. So we can definitely see there's still much growth where some analysts believe. Another thing is recently some negative news has appeared or reported online. I don't believe it has been confirmed, but Google is to slash the amount it keeps from sales on its Google Cloud Marketplace. This is not its Google App Marketplace. Some people might have confused it with this. This is the Google Cloud Marketplace. This is more where business to business kind of do a lot of transactions. There are a lot of developers are using stuff there. So there have been reports. I don't think it has been confirmed. I don't believe it has been denied. But I believe articles like this do kind of cause some form of negative volatility on the stock price. The number 4 stock in my watch list this week, and this is one that I'm really excited. This is one out of all of them, I think this is gonna be the one I'm for sure gonna pick, right? I have 4 stocks here. It doesn't mean I'm gonna purchase all 4. Sometimes I go with 2, sometimes I go with 3. Last week I purchased all 4. Feel free to check out my Discord channel. That's where I post every time I buy. That's where I post every time I sell. But Mercado Libre, at these prices where it's at right now, already in my portfolio, but it's a super small position. This is one I really want to grow. This is traded under the NASDAQ as ticker MELI, M-E-L-I. This is the e-commerce. They do e-commerce, and they're mainly known for their 3 main countries, Argentina, Brazil, and Mexico. Those are the ones they're really growing in. We can see from its 52-week high closing, the stock has definitely seen better days. It's down about, I think this would be it. It's down about 16% right now. So I'm liking at this levels, like I mentioned. It's a small position at the moment for me. One I want to make a lot bigger. So an interesting thing, Mercado Libre and the private company started a SPAC. The SPAC actually went public, and this SPAC is trying to look for Latin America digital fintech companies, I believe. So if one is looking for a SPAC, the SPAC is actually Mecca, and it is public now. I do want to say though that Mecca, this is ticker MEKS. MEKA, sorry, Mecca. Let's see if we can pull it up. Just like most SPACs, the stock price is at $10 right now. I do believe because this is MELI's, it's kind of intertwined with MELI. The stock price kind of rose up when it first started trading. It's currently sitting at $11. If one is looking for a SPAC and doesn't, they still haven't decided who they're going with or what they're purchasing. All we know is they're trying to get somebody in Latin America that's kind of dealing with some digital company that's going to be able to help out like Mercado Libre. It's something that they use. So it's definitely an interesting partnership. If one is looking for a SPAC, that would actually be number 5, right? So MELI's number 4, Mecca would be number 5 as one is looking for a SPAC play. So like I mentioned, the ordinary shares at this SPAC is going to be $10 per share. But let's take a quick look at Mercado Libre. Mercado Libre recently just made an acquisition in August 25th of 2021 of a logistics company. Mercado Libre, right, as an e-commerce company, you need to make sure you have strong logistics. I believe that's what really makes or breaks the e-commerce company. This is one that they already had partnerships with. Now they just kind of wanted control of the company, so they went out and bought it. If we take a look at their most recent earnings, right? Most recent earnings, which they reported on August 4th. So about 2 months ago, they see unique active users grew about 47% year over year. They saw gross merchandise volume grew about 39.2%. If we take a look at US dollars, net revenue grew about 93.9%. Strong growth. And they're seeing strong growth in their commerce and in their fintech business. So Mercado Libre, one I like at these levels. Some recent news, I want to say, analysts, just like most companies, they don't know what to choose. One analyst upgraded the price target to $2,200 from $1,900, so that's super bullish. But I believe we have another analyst who kind of downgraded them from a buy to a hold. So analysts are all over the place. I do believe that's causing some form of negativity to the overall stock price right now. The final thing I want to talk about Mercado Libre is recently on August 25th of 2021, they kind of added e-commerce delivery jobs for independent contractors in Mexico. This to me just shows that, hey, they need more drivers in Mexico right now. They're having a strength in that market. So right now they have to go the independent route until they kind of fully build a strong logistics like they built in Brazil and kind of like they built in Argentina. So great news. Now let's take a quick look at fundamentals. I want us to take a look at forward price to sales ratio. So right off the bat, I want to say none of these companies are looking super cheap. All of them are cheaper than I want to say than some of their peaks, especially Cerence. Cerence is the only one that's looking a little bit more attractive. So this tells me one thing. Hey, Jose, if you want to enter any of these fours, right now might not be the best time to go with the heavy position. Maybe right now it's time to go with the dollar cost averaging positions. If we take a look at EV to EBITDA forward, similar things can look at. The only one that's looking a lot cheaper than it's normally been has been Cerence and Mercado Libre. The final thing I want to take a quick look at is technicals, and here we can see Cerence right now in my time frame does not look overextended. It's looking like it's sitting next to a very attractive price point for me. The high 80s is where I would think is a huge buying opportunity. So we're super close to there. So I'm really liking Cerence at these levels. Mercado Libre not overextended, sitting next to its midterm and short-term moving average. So I like that. Facebook, same thing, right? Facebook in form of technicals looks like it's sitting next to a short-term and medium-term moving average. We can see right here, that doesn't tell me the stock price won't go down. Volatility is still here in the market. It just tells me, hey, Jose, a good portion of the risk has been eliminated and the moving averages are kind of sitting at those levels. If we take a look at Google, Google's probably the one that's most overextended out of all of them. But I believe Google is probably the strongest out of them all as well. It's one that doesn't deal or it's not too much in the news like Facebook is. And it's just growing at crazy levels. So I hope you guys enjoyed today's episode. Take care. Have a good night and see you next time.